Hi, welcome back to the podcast series with myself, Josh Ramon, Chief Market Analyst at Scope Markets. I'm joined by the CEO of Scope, Pavel Spirin, and we're here to talk all things AI. The robots are coming for us.
Scary. Glad to be here, first of all, but scary nevertheless.
Yeah, I mean, it's interesting because, of course, we're used to just everything being the old world, and suddenly we need to start looking forward and start kind of considering what the new world might look like. And in terms of investors, it's been quite clear, right? Because you have a handful of AI winners, most notably NVIDIA.
That's right.
You just say, AI is going to change everything because I'm using ChatGPT, so
right.
therefore I'll just buy NVIDIA. And as that sort of changes, it's kind of our job to try and look beyond that and try and look, how are things going to change? Who's going to benefit? What's the future going to look like? It may benefit some. It may come to the detriment of others. Mm-hmm. Now, ChatGPT was released roughly 3 years ago. The Nasdaq has doubled in value since then. Mm-hmm. And so I guess the question mark within markets at the moment, if you're following the CNBCs, your Bloombergs of this world, is like, at these valuations, can we sustain the upside for equity markets? But if you drill down into it, a lot of the upside that we've been seeing really just comes down to the tech sector.
That's right.
And Betty will say that that's justified. So do you think this is a new status quo in that, okay, if you look at valuations, they're now very elevated for companies. For those tech companies previously, there was no AI. These revenues weren't there before. Do you think it's justified now?
Yeah. Well, I don't know. It's an interesting one. I think if we look at the profits, obviously the profits are high. The revenues have grown. And I think I don't know what the exact percent is, but I think we are seeing revenues and profit margins significantly elevated versus the average 2010 to 2019. So I think it's kind of justified from that point of view, but obviously it makes the entire index very, very lopsided towards that tech sector. So I think it needs to the breadth needs to improve overall. I don't think that you can have one sector significantly outpacing everything else for the growth of the index to be sustainable. But I mean, now, for example, I don't know, S&P is close to 6,800. I feel that at least in the short term, and this is kind of looking at some of the technical indicators, RSI on the weekly basis is now in the overbought territory. I think that type of sort of stretch, short term, I feel we're starting to get into that kind of bubble territory, in my opinion.
Yeah, I mean, it's a funny one because, again, if you sort of follow the financial news, and many people who say, oh, we're in a bubble, it's going to cob, it's like the Duff Cob, or it's like the tulips, and this, that, the other. I think what's interesting about it ultimately is that whether you see it pop or not, it really just comes down to, in my mind, whether you're going to see it pull back or not. I don't think this is suddenly going to go away. This isn't a flash in the pan that suddenly next year everyone says, oh, actually, AI is not a thing.
Yeah.
I think it will continue to grow. But the question mark, I guess, is around valuations, because this period that we're in at the moment is really a case of all of the companies really trying to front load their spending to try and win the initial battle.
Yeah.
Those that sort of win that initial battle, they would hope they then gain dominance over something that's going to continue to grow.
Yeah.
No doubt. But I think they are front loading the spending. So the numbers we're seeing now are only likely to grow, but grow at perhaps a slower rate.
Yeah.
We certainly have been seeing that already in terms of the sector. Do you think when we're looking at tech versus the rest at the moment, you're talking about breadth?
Yeah.
Do you think that breadth move is going to come because of AI anyway? At the moment, it's tech companies buying from tech companies. We're not necessarily suddenly seeing huge revenues from your everyday person spending on AI in particular.
Yeah.
And soon enough, whether it's the tech companies gaining from AI or whether it's other companies that are utilizing AI to be able to perhaps offer new services or perhaps have better margins, do you think that's how the breadth move is going to come? It's going to come from AI anyway.
Well, I think this is a very good point. And I think if we look at some of the reports that are coming out, that growth is very CapEx driven. It's not consumption driven. So the everyday consumer is actually quite cautious. And I think that coincides with some of the more, labor market data, for example, those kind of types of indicators. So I think essentially the investment is happening because tech companies are investing in infrastructure, power grids, a lot of that side. But I feel sort of on the wider, wider economy, for that growth to be sustainable, it kind of need to trickle down in all the sectors, not just going to be stuck in tech. And certainly, well, I don't know, maybe I would be kind of like more comfortable seeing the actual consumer spending comfortably more. So I feel until that happens, like the growth remains, I don't know if it's unsustainable, but certainly kind of feels a bit sort of risky is how I would kind of put it.
Yeah, I mean, look, ultimately, it's all well and good companies buying from companies and everyone just constantly trying to build out this technology. But like you say, at some point, the money's got to come from somewhere aside from those companies in the revenue coming from individuals. So what's going to form that? I mean, look, I pay for the subscription to ChatGPT, but beyond that, I'm not really paying for any specific AI services. Maybe other people are. Many companies, let's say Apple, for example, it's like, oh, are Apple going to make the most out of AI? We're not buying a product based on AI at the moment. We're just buying potentially the new Apple iPhone, which we might have bought anyway. Its improvement came from AI. Same kind of thing with like, oh, Office maybe has an AI element built into it. So it'll be interesting. We're talking about sort of Tesla building robots that are going to live in your house, and then you'll be like, okay, it's because it's got AI.
Yeah.
So it doesn't really feel like we're at that stage at the moment.
Yeah.
In terms of the jobs market, I think anyone that's in the jobs market, when you see how quickly things can be created and done, start questioning how your job's going to look in the future, how much of it can be either enhanced or just replaced because of AI. And one part of that, I guess, is looking forward, thinking exactly what the economy might look like and the jobs market in particular. Do you think there's going to be the case that mass people are going to be replaced and suddenly you see much higher rates of natural unemployment that so the Federal Reserve and the central banks have to deal with? Or you think it's just going to be the case of like everyone's got to work with AI and it sort of like supercharges and superpowers people to be able to do more?
Yeah, I think it's the latter, but I think it's going to come after a period of time. I think it's actually one of the things the U.S. Senate recently identified as kind of, AI may create in the short term, kind of like employment sector frictions, so essentially people kind of like being displaced out of like, let's say more kind of manual jobs. And then that catching up of skills, is going to take some time before you can really kind of like see AI fully like replace, well, not maybe fully replace, but replace some of the, let's say, sector specific, jobs. But then those jobs get reskilled and then, you created something else on the back of that. But on the broader question, I do feel that the AI needs to kind of like create the sort of productivity, the upside in the overall economy, not just in one sector. So we need to see speed, we need to see growth, we need to see, sectors growing in the back of that. So yeah, so I do see kind of like disruption coming. I feel there's some anecdotal reports of disruption. Now, there's certainly no talk from the kind of central banks around the world, like the kind of like the use star rate, for example, Fed's use star rate, that hasn't, there was no kind of comment on that. I mean, Fed very much committed to that kind of dual mandate. So I don't see, like, there talks about it. I don't see the evidence necessarily, but I do expect it. Yeah, I do expect kind of like displacement. I expect friction, which should then drive that kind of reallocation of labor into other kind of tasks, which combined with the AI productivity that should ensue from that, should create overall growth.
Yeah, I think it's an interesting time right now because, of course, we're at this sort of turning point where US jobs don't look great. And everyone's trying to ascertain exactly what that could be to do with, right? Is it the case that the uncertainty caused by Donald Trump and the tariffs and the breakdown of nations means that businesses are firing in the same way? Could it be the move that he's made in terms of immigration and trying to push people out the country rather than bringing them in, which should definitely have a force on it? The flip side of it also is that if you look in terms of job openings, that pretty much topped out and has been declining ever since the introduction of ChatGPT, right? So at the same time, if you have question marks about how much that the AI experience is really starting to play into the jobs market and getting companies to start thinking, well, we could hire someone into this position, or we hire someone that's able to then manage agents or do their job to a higher degree than they had done previously. I guess if we're talking about the possibility of a future, certainly over the near term, before you see the sort of reskilling, you might have this phase where businesses potentially hiring less, you see higher unemployment, and therefore businesses are potentially still earning good money because they're perhaps got better margins, but then they might have less consumers, right? Because if you see higher unemployment, you have more people that are on benefits, they don't necessarily buy as much as a result. So I guess businesses might have to deal with that over the near term as well, in terms
Yeah.
of disruptions to their level of demand from consumers, but at the same time, higher margins. So it's an interesting period of time that
Yeah.
we're looking through. So do you think that that's probably going to play out, or do you think that ultimately it's going to kind of reallocate very quickly? And
I think like
See
it's as you say, like it's kind of compounded because it's not clear. It's not just that we have an AI revolution happening. We also have the potentially, at least the hints or traces of deglobalization. Supply chain disruptions on the back of the tariffs, immigration. Kind of like sort of as you said, people being pushed out of the country. Non-native people. So I feel kind of like it's hard, so I do feel that, it will smooth itself out. I feel like that initial AI hype that we've seen kind of has died down, but I feel at the same time, like in terms of investment, corporate investment in AI was the highest ever last year, 250 billion, plus dollars, according to Stanford. So it is happening, and I do feel kind of like, even though like it's not in the media as much as it kind of used to be, when it all kind of came out initially, I do feel that more and more companies and sectors are starting to embrace it, and I think eventually, we will see that sort of real disruption when people are being replaced essentially. But I think it will also lead to new educational frontiers, people kind of like taking up new jobs, consultancy, the gig economy. I feel kind of like, people today, the work, the labor, force is a lot more mobile, I feel as well. People don't work in the country where they are, right? You see a lot more remote working, people taking contracts. So I feel we're just adapting, but it's because it's so many macroeconomic trends playing into that. It's certainly the geopolitics doesn't help. I feel it's hard to predict when, but I do feel that it will kind of smooth itself out.
it's interesting. I mean, sort of bringing it back to markets.
Mm.
Like, if you think about who the benefactors of AI are going to be, it's most likely going to be the companies, right? Businesses with higher profits, to do more with less input, so lower cost. And it's probably more important than ever to be investing as a result of that, right?
Yeah.
So if you have money in the market, you're able to at least grow your wealth alongside the businesses and take advantage of that, which highlights the benefits of the stock market as a whole, right?
Yeah, that's
So
right.
people that are sort of left out of that, perhaps in jobs that are getting replaced, and they don't necessarily have the financial ability to be able to gain access to markets as well, won't necessarily really feel much benefit by way of AI. Okay, we're going to go onto some of those platforms. You might have a robot that's swooping up for you, but you might not have a job. You might not necessarily take advantage of that. So, I guess when we're talking about, a market's overvalued, maybe you've seen flips over the near term, but maybe this is also the beginning of a new world where we still haven't seen, we've seen a fraction of what AI actually means for the world going forward, whether it comes to new products, whether it comes to new processes, new ways of doing business. I guess if we're looking at sort of sectors, are there any particular sectors that you think they benefit besides tech, or you think it's, if investors are investing, they're just better off just jumping on big tech names who in that way?
Well, that's actually an interesting, interesting point around. Lost my train of thought actually. But before the investments, around valuations. The valuations, we say they're stretched, but we're using kind of like historical models, right, to say that they're stretched. But we don't live in those times anymore. So the S&P 500 keeps going up and up and up, and if we kind of take the straight line and look at its kind of like curve over, the last 20 years, it is significantly stretched. But versus, like where we are today, maybe it's not. And like, I've been kind of like looking at it since May this year. And I'm like, right, now is a good time to, build up some cash on the sidelines. But it hasn't really gone, like, it hasn't been significant pullback since then. In terms of this, going back to the question, in terms of the sectors, I feel utilities, I feel, data centers, anything to do with supply chains, physically you have to produce chips, right? Energy grids. So warehousing, to store, like, because the companies are highlighting, investment in infrastructure has to be stored somewhere, real estate connected to it. So I feel kind of like the physical infrastructure around AI is actually what will, like, if we talk about like the growth and the explosion, I feel it's not the tech that will kind of be the bottleneck. I feel it's the infrastructure around it. Do we have enough real estate, to support all the data centers? Do we have enough chips, right? Like, can we produce them quickly enough? Can we outsource them to other countries? Do we have the logistical infrastructure, energy, electricity? Do we have enough, power to power? So I feel these are the kind of like the bottlenecks, and also like these are investment opportunities. So I would be looking not necessarily in the tech now because that's where the stretch is, but I think the second wave will come from that underlying infrastructure powering those tech companies.
Yeah, I think that, at the moment there's a big focus on the sort of the building up of the infrastructure around it. And soon enough, we're going to be into the realm of actually the utilization of it for the good of people. Like I said, we use it to an extent now, but as time goes on, I'm sure there's going to be more and more businesses that perhaps aren't even listed at the moment that are going to become absolutely massive. And it feels like at the moment you're looking at a relatively lopsided market with a small group of tech companies absolutely smashing it and the rest of them doing pretty well. I think it'd be lopsided, but maybe the group of winners will be a bit bigger as you see the expansion of the benefits going forward. I guess just to wrap it up, in my mind, you're looking at an economic picture where potentially you're seeing the move away from very low unemployment, the possibility of higher unemployment, as some businesses are still making very good money. Do you think that it's going to be the case that each country is going to have to try and tax the tech companies in particular if AI is replacing jobs? And so each of these countries around the world are now suddenly going to have much higher unemployment rate, but the benefits are going to US-focused tech companies.
Yeah.
Would that be a potential headwind where, of course, Donald Trump's already pushed back against these digital sales taxes, but the countries, if all of these jobs are being lost and the benefits are just to a multinational US-based company, it's not necessarily, so that could be a potential risk in the future if they don't actually try and find monetize of it.
I think we'll have to see what actually plays out, but in the scenario where unemployment rate is rising and there is no, let's say the short-term friction is not a short-term friction, but more of an embedded trend, and as you say, like, select sectors or select companies even benefiting, yet it's the people in the countries where, that are losing out to these big corporations, I think something will have to be done. Obviously, the OECD, right? Like, I mean, they are looking at a two-pillar global tax design, and I know like there's talks about replacing these DSTs or these digital taxes on revenue. So I think like we will have to see, but I do think that the framework will have to adapt to that, and certainly especially companies, because the issue there is not just the fact that it's going to a select number of companies, it's also how these companies are paying tax, right? Some of them are set up in the low tax jurisdictions, and obviously then getting kind of like the most out of it without necessarily spreading the the revenue fairly in a way. So I do think the global framework will have to adapt to it. As to how and when and whether indeed like it will happen, I think we'll have to see how it plays out.
Right.
Yeah.
That's it for today's chat. Thanks a lot to Pavel for joining me.
Thank you for having me.
We're going to be just a lot more content like this both today and tomorrow, so make sure to follow us on the socials for all content offers. Apart from that, have some for joining me.
Thank you for having me. Thank you.